So hi, everyone. Welcome to our sixth Symposia session covering communication. Tony Santiago will be giving a brief introduction to the topic, and then he'll hand it off to our speaker today, Jude Lemke. And then Christopher Rice, who is one of the members of Symposia, will also be giving a few points at the end during the final Q&A. To give you a little bit of Jude's background, Jude is currently the Vice President of Tax at Corning, where she leads the global tax function with responsibility for worldwide tax planning, tax accounting, tax compliance, and tax controversy. Before Corning, her experience includes 3 years with Pricewaterhouse, 13 years of private law practice with a top 200 national law firm, and over 14 years as a senior tax officer for Fortune 500 companies. So on that note, I will hand it off to Tony to introduce the topic.
So first off, I want to thank everybody for attending this one. This, to me, in my opinion, is the most important Symposia session we're going to present. And there's a reason for that. Things have aligned to where communications are going to become an equal component to technical skill sets going forward. I really believe that. And it was always a subset. We always knew that, and an important subset, but I think it's going to elevate itself now. And there's reasons why. Technology, number one, inevitably, some of the more number crunching roles within tax and accounting are going to move towards bots and machine learning models. We're seeing it already aggressively. For those who attended our AI webinars, we had over 800 people combined attend those 2 webinars in a live manner. I can't even tell you how many have looked at those since then. But it is inevitably going to be a very critical time for people to understand the implications of technology.
You hear me?
Excuse me, somebody must have their speaker not muted. So if you can please check your phones real quick and make sure you're muting if you're not on. Thank you. Combined with technology is tax reform. We've had 3 major cycles, 54, 86, and now. We all know tax reform is going to have major implications. A lot of it requires not only leadership like this group here, but also members of your team to be able to communicate effectively pretty complex situations. As we know, this tax reform is a little bit of a commingled issue and requires even more complexity than prior ones have. So it is going to put more emphasis on the ability to communicate within cross-functional groups, within tax departments, and of course within management and leadership up above. And then the regulatory pressures. In each of these other cycles, 54 and 86, we never had the pressures of an NGO involved to the degree we do now in global taxation. This adds a whole nother layer of communication across, cultural barriers as well. You're dealing with global scenarios. All of these together line up to be something that is different. And it's not only the leadership. My next point is going to be, it's not only you who are in leadership or the people you report to, but it's going to be your teams. There's going to be an acceleration of the need to develop the communication skill sets across the board that we've not seen before. So these millennials and the generation that's coming in after or before them or after them, excuse me, are all going to have to get up to speed quicker here. And they're going to be crunching less numbers, and they're going to be dealing with problem-solving issues, and communication-related skill sets are going to be at the core of that. We believe that throughout your career, we think there's 6 primary different personas you're going to interact with and have to communicate with, you yourselves, and at certain stages of your career, your team members that you're developing will have the same challenge with these 6 personas. I'm going to turn it over now, and Jude's going to go into a little more detail on each one of these personas and how she feels we should attack this from a communication standpoint. Jude, if you want to take over.
Sure. Thank you, Tony. And welcome, everyone. Yeah, so on the technology front, for someone like me who's been around for 40 years, I can tell you that it's a struggle, right? I mean, I'm completely technology challenged, but you do have to learn to deal with it. So it's an important, definitely important thing to keep in mind. I have a couple of comments, general comments, and then we'll sort of jump into the various different topics that Tony outlined. But you know, just sort of a high level comment about communication. I think that we all have a tendency to rely heavily on email to communicate. And I know the millennial generation, my son's a good example, right? I mean, it's all about texting and it's all about emails, although for them it's all about texting, but for many of us it's all about emails. And one thing I would heavily encourage you to do is to, you know, substitute the walk down the hall for the email. I mean, there's a lot of what you need to do as a leader is communicate and build relationships, and sending emails does not build relationships. That personal time, one-on-one, builds relationships. So I heavily encourage you to, next time you think about writing an email, ask yourself whether it wouldn't be more effective to walk down the hall. And then another sort of general comment I would make around communication that sort of cuts across all of this is, in order to communicate effectively with someone, you need to think about how they are thinking about the topic that you are coming to them with, right? So try to see things from their eyes and less through your eyes when you're speaking to someone. I always try and approach it from, how are they going to think about it? What do I think their issues and concerns are going to be? And then try and, you know, sort of pitch the discussion from that direction, and it's going to resonate more with them if you're thinking about it from their viewpoint as opposed to from your viewpoint. So when we think about communication within the tax department, I think it's very difficult to communicate effectively and build the kind of trust that you need to build with your group if you don't have a solid grounding in each of your subgroups, right? Most of us probably come from a tax planning background, and then some of us are coming up through compliance, but many of us are coming from the tax planning perspective, and you need to get out there and really understand what is going on with each of the subgroups and how they interact with each other. They're not going to trust your leadership if you can't speak their language. And so, you know, spending time with them, understanding what they do on a regular basis, how is the compliance? I mean, if you've never put a return together, then you should spend some time reviewing returns from time to time and trying to get a handle on, you know, what it really takes to put a return together. You know, sales and use, for example, is a much forgotten area, right? Nobody pays any attention to the sales and use tax group, but your sales and use tax group, they're the group that probably has the closest relationship with the business. And they oftentimes can find answers for you that your income tax group doesn't know how to get, because they don't deal with the business and they don't deal with the systems at the granular level that your sales and use tax group does. So starting to really get down into those levels and see the world through their eyes and what they do is going to build trust so that they will follow you when you try and lead them. And many number twos, as I just said, you know, coming from that planning area, and they don't, you know, they don't know how to solve the problems for these folks, right? So you've got to sit with them and make sure, like, if you say to them, well, we need to get the return done sooner, well, that's fine, but you really need to come at it and say, what is it that's keeping us from filing the return more quickly than we do now, right? And really sitting with them and listening to what they have to say, and then helping them solve those problems, right? So, for example, when I was at Pepsi, we were spending probably 80% of our time doing reconciliations around depreciation. And, I kept trying to figure out, why are we spending so much time on this? And eventually I sat down with them and I asked them to sort of walk me through the process and explain to me what the pain points were and what were their issues that they were having that made them spend so much time with all of the reconciliations on depreciation. And what I found out was that they were just getting really bad data. And then, we sort of walked through that, and I began to realize, well, okay, we have a depreciation system. It's owned by the accounting group. The accounting group does all the book depreciation, and they spend a lot of time, and it's all neat and done properly. But when it comes to the tax books, they don't really care about them because it's tax, right? It's not really their responsibility. Well, what I did is I went over and talked to the controller and said, hey, you guys own the system, you own the tax book, and you've got to get them right and give us good reconciled data. My team's willing to sit with your team and train them to do that. But at the end of the day, it's your system, and you guys need to give us good data. And the controller was like, I absolutely agree with you. Let's work together. And we fixed it, right? We got, it's not 100%, it never is, right? But we were able to make significant improvements in the way the system was being maintained so that the data that was coming across to my group was right, so that they spent a lot less time on all those reconciliations. That's the kind of stuff that you as a leader need to be looking for, those kinds of opportunities. They don't have the power to go to the controller and tell the controller that their group isn't doing their job. But you do. As a leader, you can go over to the controller and help make their lives easier. And that's the way you can build up trust with your team too. I think another thing I would say is that your style and your demeanor in communicating with your team is really critical. A lot of times, something comes up, there's a fire drill, there's an emergency, and your team's really worried about how the CFO is going to react to something or how the controller is going to react to something. You need to be the calm inside that storm, right? You need to steady your group so that they can settle down and figure out solutions to the problems that you've identified. But if you get worked up and start getting all excited, you're going to get them all whipped up into a frenzy too. And it's funny, I was reading an article the other day that was talking about how, that's exactly the kind of thing. It gets people's cortisol going and they stop thinking clearly when you do that. So by you being calm and you helping them settle in, it's going to help them focus and actually do better work. So I really can't emphasize that too much. I think your approach to things and your keeping things at a steady level is really, really important to the group. The other thing about your tone is that you need to set a really high bar for your group, but at the same time, you should combine that with a lot of, praise for jobs well done. I mean, when someone's doing a good job, you should be pretty vocal about it, make sure people know that you're happy with their work. But that doesn't mean that you're not setting a high bar for everyone. I do think you want to set that bar. I think your goal is to be viewed as somebody who's tough but fair. I mean, I always feel good when somebody says to me, you're tough, but I always feel like you're going to be fair with me. One of the really critical things that a leader does for the department is to communicate clearly what the goals and objectives of the team are for the year. and then help that team stay focused on those goals and make sure they have the resources to deliver. We'll talk a little bit later about how you set your goals and objectives, but it's really easy for your team to get sidetracked off into the weeds because, as we all know, there's more work out there than can possibly get done. And it's really easy for people to get sucked into all these side projects and other things, or, you know, get a call from a plant controller who needs help on something. And you have to help them understand the priorities and make sure that they're really focused on the things that matter and that they're not sucking up a lot of time with things that are more inconsequential. You also need to help them get some of those more inconsequential things off their plate. I mean, if you've got somebody out in the field really bugging one of your folks about something and you've told your people it's just not important and they don't want them spending time on it, then you better go run some interference for them to make sure that that customer out in the field understands that we appreciate that they need help and we'll see what we can do as soon as we can, but right now we just don't have the bandwidth or the resources to help them. And that's what you can do, right, to help your folks when they have those tough discussions with having to prioritize stuff. And it helps them feel like you have their backs, right? And it is important that you have their backs when they have to make tough calls about what they can work on and what they have to let go. Then you need to be there to sort of protect them from the fallout of the stuff that they just simply don't have time to pick up and move on with. And then one last thing I would say with the department is to remember that you are their window into what senior management is thinking about the department. And so it is important to, you know, communicate down to them from time to time, you know, sort of how the work that they're doing is being viewed by the senior management team. Because they don't see it, right? And they have misconceptions about how they're viewed in the organization. And so you can be that person that can really help them understand how they're viewed within the organization as a whole. So moving on to cross-functional groups. So the next area that you really need to focus on in terms of communication is to, so I'm sorry, I'm getting lost here for a second.
Yeah, Jude, we're going to take just a quick break to ask a few questions to see. You also have an example of the workflow that you sent to us that we're going to put on the screen. If you want to walk them through that just real quickly, and then we'll do the Q&As after that for this section here.
Okay, great. Sorry, that's what, yeah. So in terms of helping your team sort of stay focused on goals and objectives, it is helpful to put together sort of, you know, some dashboard type stuff to help keep them focused. So for example, you could have a schedule like this where you would lay out the major goals, and you shouldn't, you know, at the end of the day, there's probably somewhere between 5 or 10 really major goals that you're trying to accomplish for the year, and 10's a lot, quite frankly. And you know, obviously, there's lots of other stuff going on. They have to keep their eye on, but they should be sort of laser focused on the major goals that have to happen. And so by laying them out like this, where you put each goal and then you start laying out the various sub work streams within each of those goals with the timing and the completion dates and who's got the responsibility, and then you just sort of have this red, green, yellow as a tracker for where you stand, and identifying your high-level risks. And then the second schedule is sort of a more detailed drill down behind each individual goal of the tasks that are involved in that goal, where things stand, who's the lead, you know, sort of key tasks that have to happen, and some of the issues and concerns and where you stand, right? And then making sure you're tracking the major milestones within that project. So it's a tool that you can use to kind of keep your team very focused on some of the major things that have to happen throughout the year. And it's a good way for you then to sort of have a dashboard of where things stand so that you can start to focus in when you start to see a lot of yellows or you start seeing reds. Then that's how you can focus in to say, all right, you know, why is this happening? What can we do? Do we need to bring in more resources? Do we need to bring in outside counsel? Is there, you know, what can we do to turn that red into a green? So hopefully that's a helpful tool for folks in terms of, you know, sort of tracking the major stuff that's going on. So that was a lot in a short period of time. So I guess we'll open it up to questions.
Does anyone have any questions?
Jude,
go ahead.
Yes, I wanted to I can tell you guys that I have a great example of how not to do this, because what Jude's laying out to you is extremely important, that the interdepartmental communication be wide open. I have a global Fortune, probably 200 company right now, U.S. operations over 26 billion. The head of tax saw tax reform coming and at the last minute decided he would retire effective December of 31, 2017 with like 2 months notice. His style of communication was intimidation, pitting people against each other. The head of planning and head of operations, through 20 plus years of working together, never really enjoyed each other or agreed to it. They never saw eye to eye. In fact, when the U.S. CFO and the global head of tax came in and flew in to meet to talk about what to do, both of them individually told the CFO that if the other person was hired, they would quit. That's how bad it had gotten. So it was all about communication and how the leadership had not done what we just outlined here in an amazing way, and they were able to get away with it for almost 20 years. You can only imagine how much loss of productivity occurred with that kind of working relationship. But if you think it's you know, an outlier, don't kid yourselves. I see it all the time. It's one of the main reasons I can recruit people out of companies, is because there's, quite frankly, a lack of leadership and a lack of communication within the departments. It's where it starts to stem. So this is a huge section, and I would highly encourage anybody asking questions of Jude about this section, because if you don't have communication down within your department, it's going to spread rapidly, and you're going to have turnover that you don't expect. I can assure you of that. Never mind dissatisfied internal clients and not hitting your goals and milestones that she's outlined here. So anybody have any questions on follow-up on this topic? Shannon, you want to move on?
Yep.
All right, so I think the next area is your cross-functional groups, right? And I think what you see in the old days, right, the tax function was sort of walled off, and it was like a back office thing, and nobody wanted to talk to tax. And I think that over the last certainly 10 years, and it has become more and more important that tax is involved in everything across the board, right? You know, with stocks and all sorts of other things, and audit committees are becoming a lot more sophisticated, and just the globalization of everything. You know, tax is so critical to everything. And so you need to start really building out your relationships with the cross-functional groups within the organization, so that you're there as a player with them. And in order to do that, you know, you need to start really understanding what each of these different groups do and how they operate. I mean, every company is a little bit different the way they operate. And then you need to figure out how you intersect with them, and make sure that that you have a pretty decent understanding of what they do. Not the same kind of in-depth understanding that you need within the tax group, but certainly you need to have a pretty good understanding of how the organization as a whole works. And when you think about that, you need to think broadly about who these cross-functional groups are that you should be intersecting with. Some of the most obvious ones are, obviously the business and your finance and your FP&A group, your technical accounting group, legal, corporate development, treasury. Those are the ones that, you think of every day. But there's a lot of other groups out there that you should be thinking about how you touch. And there's a couple of them listed here, and this isn't necessarily a complete list, right? But you should be thinking about the impacts of anything you're doing from an HR perspective. Systems is a major, major thing. I will tell you right now that many, many, many times the reason something fails, a project fails, a tax plan fails, it's because the systems can't do what you want them to do, right? You can have the greatest planning idea in the world, but if you can't make it work in the systems that exist in the organization, it isn't worth the paper it's printed on. And I've seen a lot of projects fail because nobody thought about whether or not it was possible to even account for things, because nobody went and figured out how the systems were set up and whether they could actually be structured to deal with the new planning idea. Global supply chain is important. Shared services is becoming more and more and more important, right? There's been a huge growth in the whole shared service industry, and most companies I know now are building out fairly sophisticated shared service organizations within their companies or outsourcing them. And there are a lot of issues involved in those shared service organizations, and how do they track VAT? How do they deal with sales and use tax? There's just a ton of issues, and you need to be aware of that. And in addition, there's opportunities there, right? There's a lot of noise out there now about using robotics to process information and data. We're doing it here at Corning. We've got robotics in our shared services to pay our invoices. But there's a big push in the tax field to use robotics to help with compliance, and that would be your shared service organization probably helping you with that. R&D, investor relations, etc. It's important not to think of yourself as a tax advisor. So when you're dealing with these groups, you need to think of yourself more as a business advisor and start looking at the bigger picture, because you're you see everything. You see everything, and oftentimes the other groups aren't seeing the bigger picture. So it's easier for us to spot inconsistencies in what's going on. I'll give you a really quick example. We were working on a global supply chain project, and as part of that, there was this bonded warehouse, and we were in the process of working with the business to get the warehouse bonded. And in the meantime, there was another group that had sent a shipment off to be accepted by this bonded warehouse, but it wasn't bonded yet, and it didn't have the license to accept the pharmaceutical products that were coming in. And it was out on the ocean. Well, we saw it, and we were like, wait a minute, guys, you gotta turn that ship around. But nobody else saw it. We could see it because we were looking at it at a much higher level than everybody else was. But don't be afraid to jump in and say, wait a minute, you better turn that ship around. It has nothing to do with tax, but you see that stuff in a way that other people don't. So I think that, you can be eyes and ears for a lot of different issues. So the next group that you need to deal with are your external advisors. And on this one, I think what's important with your external advisors, a couple of things. You need to have a very clear, open relationship with them about fees and your expectations, and make sure that when you're putting your engagement letter together, that you have a very detailed set of deliverables and how the fee breaks down against them. And then you need to stay very, very close to that work plan and be sitting with your advisors on a regular basis to really go through the work plan and sort of measure where you are against it. Because that's how you're going to prevent fee disputes. The number one thing that gets in your way with your outside advisors are fee disputes. And that happens because they don't bill on a regular basis, and then suddenly they show up with some whopping bill, and then you start having an argument about, well, what was in scope, what wasn't in scope, and you can't remember anymore because they showed up with a bill 6 months after the work was done. You can avoid all of that by having a very, very close working relationship with the relationship partner on the account, meeting with them every month, going over exactly where they are in the WIP and how it matches up against the work plan, and working through those out of scopes in real time. And in that regard, I would make sure that you make it very clear to them that they cannot go over on anything without your permission in advance, and that you won't pay them if they go over without talking to you first. That's going to go a long way toward avoiding those fee disputes. And then the other thing I would say is a lot of people try and squeeze their advisors really, really, really hard to try and save money. I think that can be a mistake. You need to be fair with them, and you do need to hold them accountable and hold their feet to the fire, but you have to be fair with them. And if you're not, and you squeeze them too hard, you're going to pay the consequences down the road, because they're not going to deliver for you when you need them in an emergency. If you've treated them poorly, they're going to treat you badly when you need them the most, right? But if you've treated them fairly throughout, and you always, treat them right, they're going to deliver for you. When they have emergencies on their plate, they're going to pick up your project first and not the other guy's project. So, do caution you not to get too carried away with squeezing them on fees. So I'd say the next area is leadership in the business operations. Now, obviously, this is one of the more important things you need to do as the leader of the department, is to establish that relationship with the business operational leader so your department can actually function at the level at which it needs to. Your role is to understand all of the business priorities and the overall strategy for the company, and then align the department's priorities and strategies to support those goals. So when you lay out the goals and objectives for the department, they should line up very, very closely to the goals and objectives for the company as a whole. I mean, there's always going to be standalone tax projects that are outside the scope of the overall company goals and objectives. But first and foremost, most of your time should be spent making sure that the company as a whole is meeting its overall goals and objectives. And that means helping them, find ways to reduce costs or figure out how to structure some new business and help them with their supply chain or whatever, right? But you need to be out there thinking about what the business is doing next and what you can do to make the business successful in doing that. And that's going to allow you to be viewed as a value-added partner so that the businesses will start inviting you to the table on a regular basis. And that's where you can really add value for your team, right? The more that you understand what's going on in the business, then you're the entree for your team to start getting included in those things so that they can be more effective and support the business as well. So I think we will take a pause there and see if anybody has any questions
I have a few that got chatted in. Jude, I'll read it off to you. So the first one I got was, can you give us an example of when you had a difficult cross-functional group communication issue, and how did you resolve that? We're having issues with our accounting group right now.
Yeah. I think that, so the accounting group is really critical, right? I mean, if you can't get along with your accounting group, you're not going to be able to get the data you need, et cetera. And I think it's a common problem, right? It is a common problem with tax and accounting. You hear a lot of organizations seem to have that problem. I think you just need to go and start talking with the controller about those issues and try, again, I mean, I would approach it from the viewpoint of, from their viewpoint, right? Like, what do they see are the issues that are occurring, and how do they see a way to resolve some of the problems that are occurring? And then, you know, so it's a lot of listening and asking questions and saying, hey, what if we tried this, or what if we, you know, did it this way, or is there something we can do to make this better? That one is just really trying to spend as much time with them as you can and really understand what their concerns are. I think a lot of times the departments are talking past each other. They're not speaking the same language, and so it's really just asking a lot of questions to try and understand what their concerns are, and keep digging and digging to try and understand better what the disconnect is.
I got another question in chat, Jude. This one is, we are hearing about some of the public accounting firms approaching financial leadership about potential outsourcing proposals without the tax department's knowledge. How do we protect ourselves from these tactics? And how do we protect ourselves from these tactics?
That's a very good question. So I have a couple of things I would say. First of all, you need to be prepared for that happening, right? I mean, and you shouldn't wait for it to happen. You should be prepared for it to happen, because it will eventually happen to you at some point in your career. I'm actually a very firm believer that outsourcing your tax department can be a bad thing, because you lose ownership of the data, and without ownership of the data, it becomes very difficult. But you know what they're doing is they're sort of preying on the CFO's need to get the cost down. So one of the things I would do very clearly is I would spend some time benchmarking your department against other departments and trying to figure out, right, how to right size your organization and how to justify why you do what you do. Most of the time, if you do a good job of really being efficient and effective, it is hard, I think, for these organizations to come in and really make a case for why you should outsource stuff. One thing I would suggest to you, recommend to you, so the NAM, the National Association of Manufacturers, puts out a really good benchmarking study. That's a fairly detailed benchmarking study of tax departments every 5 years or so. And most of the benchmarking that's done by these bigger companies, they come in and benchmark the finance group as a whole. They spend very, very little time or very little effort around the tax benchmarking, and it's really superficial. And so you have to sort of be ready for that and defend yourself. And if you use, like, for example, this NAM benchmarking, you can really dig in and take a really close look at and be ready to defend your organization by pulling that information together and taking a look at how you stack up against that benchmarking NAM does. I use that at Pepsi really effectively. And I've kept a close eye on the NAM benchmarking ever since. So I think that's a good place, and it can help justify, right? Like your budget. I mean, a lot of times you get a lot of pressure about the budget and why is it so high. If you can show that through this NAM, for example, that companies your size have a median budget of X, and you're right there, that really goes a long way to getting the CFO more comfortable. But the other thing is you have to establish a close relationship with your CFO so that when these advisors go around you, your CFO shares it with you, right? And you need that open, honest relationship with your CFO. So when he comes to you and says, why don't we do this? You can say, well, let me lay out for you why I think that we can do it just as effectively, and maybe we're a little more expensive, but the value we add is a lot greater than what you're going to get in an outsourced relationship.
And Jude, I just had an example with a client of mine where I got a phone call from the CTO, and this just occurred. And it seems like the activity's picking up again. I think whoever sent the question is correct. We're starting to see, we won't name the names, but we know who the big four firms are driving it a little bit more right now. It happened in the late 80s when they were, trying to figure out other revenue generation models too. But it was interesting because in this case, the CFO did bring the information to the CTO, and the CTO had laid a lot of groundwork with the CFO and the CEO on other topics strategically on how to optimize the tax department. So to her credit, she was involved in the discussions, and then we kind of helped pull together some data, and just like you talked about, comparable department data to make sure that they understood how they benchmarked up against others, and also contrasting what was unique about their situation that would cause implications if they tried to outsource certain elements of it. And I think she's been able to defend it, shall we say.
And there certainly are times when it makes sense to look at some forms of outsourcing. So for example, right, it might make perfect sense to outsource your sales and use tax compliance if you've got a fairly straightforward sales and use tax function, right? Now, some places are more complicated than others. I mean, you wouldn't outsource your sales and use in a telecom company. It's way too complicated. But you might in other venues. I've done it in at least one company, and it was very efficient for us. And it freed up my people to do a lot more value-added work around sales and use planning and fighting audits and that sort of thing. So, I mean, don't turn your back on outsourcing just completely. You should definitely be thinking about where it can help you. But I think the thing that I don't believe is a good idea is to outsource your compliance, your income tax compliance, a full-blown outsourcing, because there's too much turnover in the accounting firms. And yes, they will lowball the number at the front end, but within a couple of years, that number comes way back up again. And in the meantime, the turnover and everything else, you're just not close to the data anymore, and it's really hard to do effective planning.
Does anyone have any more questions? All right, we'll go on to the next slide.
So obviously, one of the most important groups that you are going to need to communicate with is the finance and executive leadership, the upper management. And there, I think what's really important and maybe a little bit alien to some of us is you need to understand their cadence, right? If you look at any major publicly held company, there's a calendar, and you can go out and ask for it, right? I mean, there's a calendar and it tells you exactly when everything's happening. I mean, there are, you know, sort of specific dates for when all the financial reporting is going to happen. There are specific dates for major regional meetings that are going to happen throughout the organization. There are calendars that deal with, you know, when executive leadership is going to meet, when, you know, when the management committee is going to meet, when the audit committee meets, and the board, et cetera, right? So finding all those calendars and making sure you understand them is going to help you understand sort of the cadence of what's happening in the organization and when to anticipate what information you might be asked to supply. And another important set of calendars to pay attention to, by the way, are the HR calendars, right? When does PD&R have to happen? When do you have to have your bonus information together? All of that sort of stuff. And the budgeting, which is another, you know, forecasting and planning, and the budgeting is another important calendar, right? To really pay attention to and get on board with. And then you need to sort of start to really understand what it is they're going to need from you from a realistic perspective, and figure out when they need it by, right? And then the other thing I think that's really hard sometimes is communicating to them sort of what tax is a very uncertain, you know, sort of environment, and there's always things you don't know. And so you need to learn how to communicate to them in a very confident way. Here's what we know today. Here's some of the issues that we're still working on. Here are some of the range of solutions we have. And, you know, if, you know, depending on what solution we pick, this is what the outcome could be. And sometimes you're not going to have an answer, right? But you have to give them enough information to keep moving forward, right? I mean, the current environment is the perfect example, right? We have a brand new tax law, and Treasury is telling us it's going to take us 18 months before we see a set of regulations. And I'm sure you're all getting bombarded with questions about what your new effective tax rate is. You simply have to learn to live inside that ambiguity of not really knowing what your tax rate is, because you don't have answers to a lot of critical questions, right? You have to kind of do the best you can do and come up with an answer. I mean, for better or worse, we're all going to have an effective rate at the end of our first quarter, and we're going to have to book to that effective rate. And we're not going to be 100% certain it's true, because there's too many open questions. But you have to have the confidence to say, this is the best answer I have. It's based on, you know, the best, you know, sort of, we've come up with reasonable interpretations of the law that we think we can sustain. And make sure that your CFO understands what the range of issues are that are out there, and that as they come up and get resolved, there may be changes as we go forward. That's where having a really strong relationship with your CFO and his or her trust, is really going to help you, because they're going to trust that you're not going to, you know, you're not going to surprise them with something. And speaking of surprises, that is like a cardinal rule in dealing with your senior leadership. No surprises, ever. Not good surprises, not bad surprises, right? And the reason is because they are working very hard to show steady growth in earnings quarter over quarter over quarter. And, you know, you may think that showing up with a big surprise, good guy, should get you a pat on the back, but it won't necessarily, because now you've just created a situation where they have to be that much better the next quarter. They weren't planning on being that much better the next quarter, right? They were planning on slow, steady growth based on what you had originally told them. And now suddenly, you know, they have this quarter out of the blue that screws up their projections and makes it harder to be better in the next quarter. So that's really an important thing to remember. And then, you know, just understand that your boss is always going to give you a stretch goal, for better or worse, right? Like, you've got to learn to sort of have your list of various projects that you can go to you know, sort of plug the hole if you're not quite where you need to be on the rate. But if you go in and tell somebody that your rate's going to be 24%, you can assume that your boss is going to say, all right, that's great, but I want you to deliver 22% or 23% or whatever it is. You need to be prepared for that and have some backup plans for how you might get there. And certainly at a minimum, right, you have to have enough confidence in yourself and in your team that if your boss wants your rate down, you can deliver a point or two, right? I mean, what are they paying us for if we can't come up with some planning to get the rate down? So, but what you don't want to do is sandbag too many times, right? Because you start sandbagging over and over again, and you're going to erode the trust that you have with the C-suite. And then when you really do want to hold the line and say, no, we really can't deliver that, that's not possible, they're not going to believe you. And then you're going to have a problem. So, you know, really learning to sort of walk that line where you're going to have to sort of learn how to get comfortable with the stretch goal and being able to deliver on it, so that someday, one day, you know, your boss is going to lay that stretch goal out, and maybe you're going to have to say, I'm sorry, but I can't make that one. There's just, you know, the facts just won't allow us this year to get there, right? We can get here, but we can't get there. But you're not going to be able to have that conversation if you've sandbagged them over and over and over again. So, and then I say that the communication with your C-suite is a very different communication than with the audit committee or with your board. Now, most companies will have you present at least once a year to the audit committee. You usually don't present to the whole board. I mean, I think that's fairly unusual, but it's very common that you would, at a very minimum, meet with the audit committee at least once a year. Now, that didn't used to happen a lot, but over the last 15 or 20 years, it's become much more common. And I would say it's pretty much standard. And some companies meet more regularly with the audit committee, and certainly from time to time, right? If something like tax reform or maybe you have a big audit, you might meet with them more often than once a year. It is important to understand that the role of the audit committee is not to run the company. And so when you're presenting to the audit committee, the way you approach it is going to be very different than the way you might approach things with your CFO. The level of detail you share is going to be very high level compared to what you would want to share with your CFO. And it's going to be very important to sit with your CFO and have a very clear understanding from him of how he approaches the audit committee and how he would like to, you know, deliver information to the audit committee. I mean, as a practical matter, that'll happen, right? Because I suspect that your CFO will be all over your presentation. But it's good to have a dialogue with your CFO and really understand, you know, sort of conceptually, how does he think about tax and what does he want to share with the audit committee? And in that regard, by the way, just as an aside, you have to be a little careful with the way you communicate with your outside auditors, because you need to remember that your outside auditors are going to be asked questions in private session by the audit committee about how things are going. So if you've shared something with your outside auditor that your CFO didn't want shared with the audit committee, you might suddenly find that the audit committee hears about it from the audit partner or the tax partner. So that's just a watch out. Be careful of that. So with that, oh, and this example, I guess, is just a building out a little bit more on that original template that we talked about earlier. And I think that it might be labeled a little bit. It's labeled as an audit committee example, but it's actually the goals and objectives example. So just I started to fill it in a little bit to give you a little more idea of sort of how the template works. But you know, I mean, it's just an example of how you can track kind of your larger projects.
Hi, this is Sarah Rana. I wondered if I could ask a question. At my company, we've had a lot of turnover, both at the management level and at the board level for a variety of different reasons, just people retiring from the board or just changes, people had to resign due to conflicts, whatever it was. And one of the things I've struggled with is I present pretty regularly, actually, to our audit committee. And, you know, how have you dealt in the past with two things? One is feeling like you only have limited time, so you don't want to rehash all the old stuff to kind of bring the new people up to speed. That's sort of one question. And then the second question is, you know, when you're dealing with changes to leadership internally, do you, like, how have you dealt with that in terms of developing new relationships?
Yeah, that's always hard, right? Because, but let me answer your first question quickly. I think that there's an opportunity probably outside of the formal audit committee meeting itself to help get some background material to the audit committee members. I mean, I would talk to probably your controller is the one who's uploading data to the audit committee members. I would sit with your controller and say, you know, how can we feed some background information to the audit committee members who are new so that we don't have to spend time in the audit committee itself, getting them up to speed? I suspect that they will be open to that. I think you could probably do that pretty easily, I would guess. In terms of turnover in senior management, I mean, that's always, you know, change is always very disconcerting, and it's hard, right? I mean, anytime you have a change in leadership, right, you've got to kind of feel out their leadership style and what they like and what they don't like and what their expectations are and all of that. I think that there's a couple of ways to sort of triangulate it. One is obviously to sit down with the new person and really have a heart-to-heart conversation about, you know, how would you like to operate? You know, how do you think about tax? How do you want me to operate under you? Like, what do you like to see? Are you a detailed-oriented person? You only want high level? You know, how do you want to set goals and objectives? I mean, I would have that conversation with a new boss. The other thing you can do is, you know, tax and finance, they're small worlds. I'd probably start doing some networking behind the scenes to try and find out something about those people. I mean, if it's an internal candidate, there's probably more immediate resources you can go to find out what their style is, what they're like working for what they like, what they don't like. Or you can go outside, right, to other organizations. I'll tell you one good resource, and that's, he's sitting right here on the phone with you, Tony. Tony seems to know a lot about everybody out there in the large companies, right? So, you know, there have been times when I've called him and said, what do you know about this person? And amazingly enough, he seems to always know a lot about them. So it's just, you know, poking around, and everyone has a different style. So it's trying to suss out what that style is and what they think about tax and how they like to see things done.
Thank you. That's helpful.
Yep. And I know Christopher had a couple points you want to make during the final Q&A. So Christopher, I'll hand it off to you.
Yeah, Jude, thanks. Even going back through this again with you has been useful for me. I think one of the other things that we chatted about when we were together was, and maybe Jude, maybe you have some thoughts around it as well, once we get our communication plans down and really think about the different places and ways we communicate. You have that seat at the table. How do we use these communications and the networks we build to leverage just the tax organization, the brand of the tax organization? I know that's one that we chatted about as well, Jude. I think you hit some of that a little bit tangentially in the comments, but any other thoughts that you have around, if you get these communications right, how we might be able to leverage the seat at the table that we have?
Yeah, I do. I mean, I think one of the things that we don't do very well sometimes is helping the business understand what we can deliver for them. You know, we come, we show up, we ask for a lot of data, you know, we put these structures in place, and they don't really understand it. And I think that taking some time to really sit down with the finance controllers and division leaders to really explain to them what it is you're trying to do and why you think what you're doing is going to add value for them. One thing I've often found is that the more that the business understands what it is you're trying to do, the more they're likely to help you achieve that goal. And the more they understand what you're trying to do, then what I've found oftentimes, right, is they're like, oh, wow, well, I hadn't thought about that, but what about this? Because, you know, I know you're thinking about it this way, but there's this, I think you could do better by doing this over here, right? And so by getting their buy-in, really helping them understand it, and then starting to get their buy-in, it becomes not a tax project, but a business project, right? And that by itself will build your brand, right? I mean, what you want to be viewed as is not the tax guy. You want to be viewed as somebody who's coming and thinking about the business holistically, and someone who's trying to help them achieve what they're trying to do. And so, you know, some of it's like pitching to them, hey, I can help your bottom line. Let me come in and help you take a hard look at your VAT, which is an above the line tax, right? So they like that a lot. That, you know, the below line oftentimes is less interesting to them. But if you focus on their above the line taxes, you will get their attention quickly, right? Yeah. And then once they start to see that you can really help them look good to their boss, then you can, you know, sort of expand out and get their help on the income tax line.
I think that's right. And one of the things we also talked about in our session, and maybe curious to hear from other folks as well, was with reform upon us, this is the opportune time to have many of those discussions, as you say, Jude, not necessarily approaching it only as a tax professional, which that's big. But I found that over the last month and a half, we've had so many really interesting discussions with every part of the business as they start thinking about their strategic plans, other options that open up with local and global supply chains and procurement. Also with other parts of our business, it becomes much more commercial, and it opens up that seat such that you have wider discussions as you think strategically with business leaders. So I'd agree with that as well.
Yeah, and look, and there isn't a business out there that isn't being tasked with reducing costs, right? Every single business in the world, right? And there are a lot of things we can do to help reduce costs. I mean, if you just think about supply chain and procurement, and that's where a lot of the cost savings is when you look at these companies and you see the kinds of money that they save, $400 million a year or whatever, right? It's coming out of their manufacturing and their supply chain. And we can add value in manufacturing and supply chain. We don't always think of ourselves that way, but we can add a lot of value in those spaces if we really put our minds to it. And that's where they're looking to add, to really reduce costs. So that's the kind of thing, right? If you focus on the things they're focused on, they're going to start calling you more often.
I have a question coming through chat. As a number 2 currently, what is the most common mistake a new CTO makes when communicating with finance and executive leadership?
I think that I think it's a combination of trying to be too precise and too technical, right? I mean, you need to learn to kind of roll with the punches a little bit around. When you're explaining something, you can't get into all the minutia of, all the different problems with your solution, what your problem is, right? You've got to learn to break it down into a couple of high-level points, even though you're glossing over a whole host of issues. You need to learn how to really break it down, right? Like I would say, right, if you're going in to a meeting with senior executives, you can make maybe 3 or 4 big points. You don't have time to sit there and explain to them all these underlying minutiae of tax issues. But a lot of tax executives try and get in there and go, well, but on the other hand, you got this issue over here, you got this issue over here, and this could happen and that could happen. You've got to go in there and say, look, I can deliver on this. There's a couple of big points we need to make. Here's a few issues that we're going to have to figure out. And then sometimes you just have to have enough faith in yourself that you're going to figure it out, right? And you can just say, you may not know how you're going to get there, but somehow you're going to get there. You can say, we're working on this part, but we're pretty sure we're going to get there, right? And then just move on. Like sometimes new CTOs, like they just get caught in trying to, protect themselves, right? By like talking about everything that could possibly happen.
Another question come in, Jude. Does there become a time to realize that leadership is not valuing tax and/or yourself, and it is time to move?
Well, I will tell you the largest red flag, and the one where I would turn and walk out the door, and that is if your CFO is not willing to take the time and the effort to understand what's going on, but at the same time is pressuring you to get the rate down, that's a huge red flag, right? Because that's a warning sign that if you don't get that rate down, or if you get the rate down by getting more and more aggressive, but your CFO isn't taking the time to understand the risk profile of getting that rate down, and something then goes sideways, you lose a case or, whatever, that's a bad situation because your CFO is not going to have your back. You need a CFO who's, maybe they want to be more risk tolerant, right? They want a more aggressive risk profile. That's fine. But if they don't take the time to understand what that risk profile really is, then I can assure you that when things happen, they're not going to have your back, right? So you need to be sure that whatever the risk profile is your company is willing to take on, your CFO thoroughly understands it and is going to have your back. That's probably the number one situation where I would turn and walk away. And really, if you don't have a good relationship with your CFO, you either have to figure out a way to have a good relationship with your CFO or move on, right? I mean, that's such a critical component of being successful in this role. If you don't have a good relationship, or whoever you're reporting to, I mean, I think most companies, it's the CFO, but in many companies, it's the treasurer or even the controller, right? But if you don't have that kind of a relationship, you either need to build it or you need to move on if you can't build it.
Another question, what is the best advice you can give when you know you have to present information that will be clearly received negatively?
Well, I mean, first and foremost, right, there's many times we have to deliver bad information. And creating that level of trust well before you ever have to have that conversation is going to go 90% of the way toward helping you deliver the bad information. I think the other thing is when you go in and deliver bad information, you need to be careful that you don't become, Chicken Little, the sky is falling, right? You need to go in there. First of all, don't go in and tell them something before you've spent the amount of time. You need to go in. You need to spend the time before you ever walk in the door to thoroughly understand the issue and make sure that you've really looked at it at enough level of detail that you understand it. You should try and go in with a solution as best you can, right? And maybe there isn't a good solution, right? I mean, listen, it's happened to me many times, and it happened to me many times last year. So, you go in and you say, hey, this is where we are. There's a couple of potential outcomes. One of them's really bad, and we've got a couple of other ideas that we think might work. Here's where we are. Here's what it looks like if it goes south. Here's what this solution looks like. Here's what this solution looks like. The more confidence you can instill by having your ducks in a row and be able to talk very matter-of-factly about what the choices are and demonstrate that you've thought it through and you've really looked at everything, right? And that you've quantified it. Go in there and don't just say, you need to go in there thinking, this is what it looks like from a P&L standpoint. This is what it looks like from a cash flow perspective. This is what it looks like from a perception. You might have a PR issue, right? You need to sort of look at it in each of these different contexts and have those answers, right? The more you can go in and be able to really answer your CFO's questions in real time is going to instill more confidence in them. And again, honestly, it's about the relationship you have. If your CFO doesn't trust you and you go in with bad news, it's not going to be fun, no matter what you do.
Right. Does anyone have any more questions for Jude or Tony? All right, so I think we're about out of time. So thank you everyone for joining us today, and thank you so much, Jude, for being our speaker. And also thank you to Christopher and Tony for helping us put the material together. But I'll be sending everyone the recording of today's presentation as well as the full slide deck, so you also have those dashboard examples. I will also put this on the Symposia forum. So if you have any additional questions, just feel free to post them on there and we'll get them answered. But thanks, everyone. I really appreciate you joining us today.
Thanks, everybody. Jude, can't thank you enough. I know how busy you are. So everybody, you got to recognize she took a lot of time out of a busy schedule to do this. So once again, thank you, and thanks, Chris.
Thank you.
Thank you.